By the way, to tackle this topic of holiday shopping, we've assembled a taking stock think tank. Bill Angrick is the CEO of Liquidity Services. He's going to be working with top retailers to sell the merchandise that does not move during the holiday season through his website, liquidation.com. Melissa Otto is here. She's the director of TIAA-CREF Investment Management, who follows gaming and electronic stores. And Bob Duffy is senior managing director of FTI Consulting. He's been advising his retail clients to expect a 3% increase in seasonal spending. Bob, let's start with you. Why are people getting jazzed up, you think, about this holiday shopping season?
Well, I think retail's been back for a while, John, and I think what's happening is you're seeing an acceleration of really what's happened throughout the beginning part of the year. I think retail is back, and we're bullish at FTI on where retail is for this year.
Melissa, you feel the same way?
Absolutely. The promotional activity is fascinating. We conducted a number of surveys internally ourselves, and it's interesting to see both the online and the actual activity that's going on in the stores. So we're seeing a migration and convergence of the two, which we haven't really seen before, which I think is creating even more of a buzz.
Hey, Bill, how does that affect your business? I mean, you're waiting to move the stuff that doesn't move, right?
Sure. We serve about over 1,000 commercial sellers, including 7 of the top 10 retailers. And what we've seen is that discount mentality has been pulled forward ahead of Black Friday to attract volume. There's a constant tension between selling volume and maintaining margin. Our service is allowing these retailers to rebalance full margin versus less interesting product throughout the year.
Bill, so many retailers have been saying that they're going to manage their inventories better. How will that affect your business? Will there actually be all that excess to actually liquidate?
I think this year we have seen a little bit of a more resilient consumer. Their eyes are wide open, but they're still very frugal, looking for bargains. So the tactics that our retail clients use are to be more nimble, more proactive. When they see something on the shelves not moving, they want to replace that product with full margin product. So they'll move that off the shelf and auction it through our liquidation.com marketplace. We've seen our auction count grow 20% going into Black Friday versus the prior year, and they'll continue those tactics throughout the January return season. And so that's a way that clients are using e-commerce on the backside of the retail supply chain to manage their supply chain going forward.
Hey, Bob, and something you've talked about on that point, the new normal has treated retailers perhaps a little bit better than other companies in the retailing industry.
Well, I mean, I think retailers generally have done a great job, as Bill talked about, managing their inventories. One of the things that they've done is, one, their inventory is much lower. They've done a great job across the board of reducing their costs and then driving up margins. And I think that's what's helping them propel them into where they are for this holiday season.
Melissa, you were going to say something?
My view is that as we go into this Black Friday holidays, that the acceleration and the momentum has already begun. So I think we're seeing that consumers are, the seed has been planted. The promotional activity, it started, I think, from Monday. And I think as we move into this Friday, maybe we start to see the peak. But I kind of wonder if we've somewhat peaked out even already.
In the stuff that you follow, too, like some of the gaming, the electric?
Absolutely, absolutely. I mean, the activity has just been so pronounced ahead of the Black Friday. I mean, seeing some retailers coming out with promotional activity a couple of days in advance. So I think just really generating that buzz among the consumers. But if you look at Best Buy, if you look at Walmart, for televisions, for cameras, for game equipment, software, or consoles, the pricing is phenomenal this year relative to where it was last year. Also, the offerings, much, much better than they have been. Even in the past few months, we see a real acceleration.
Hold that. Bob, one of the big questions out there, as so much money is being spent online this holiday shopping season, is whether or not that's good for the retail spending generally, or if that takes away from the rest of the pie. People aren't going to go out and spend somewhere else because they're spending more online. What do you think about that?
I think it's great. I mean, I think for retailers it's great, especially because there's a lot of store-based retailers that have significant online businesses. Last year at FTI, one of the things that we saw is that without online, retail would have been in the red. But it was really the drive from online in last year's Christmas that really drove retail from being red or negative into black. And as we look at this year and we look at what's going on with online, it's going to continue to grab, as we all know, a greater share of the entire retail sales. And that's clearly, as we look at it and we look at the move from brick and mortar, positive for the retailers that have the good strategies and are ready to exploit those markets.
Bill, do you find, I mean, hey, you're operating in that world as well. Do you find the same to be true?
Yeah, clearly there's a secular change to online. Roughly 7% of all retail sales are occurring online. Com store numbers came out for November. Online shopping's up 13% year over year versus 2% for traditional retail. So what that means is, however, online retailers need to have a strategy for managing returns. As you know, consumers want trust. They want to have a returns policy they can believe in to try new things online. We have seen in liquidation.com proactive management by retailers who are selling more online to manage their returns flow. Product obsolescence, technology innovation creates a little bit more confusion for consumers, so the ability to return that item and not have it clog up the retail store or the supply chain is very important.
Melissa, I want to go back to something you mentioned earlier when you said that we're starting to see some people think that maybe the consumer's peaking out. In the things you cover, particularly in video games, the entertainment software business, people have made some pretty big bets that they expect sales to go through December. People like Electronic Arts, people like Microsoft with the new Kinect. I mean, will they be disappointed?
A few of the things that we're really looking at in the stores, particularly into this Black Friday, over this weekend, and over the next couple of weeks, is the traffic and the spend. We're looking for how that convergence really conforms with what's actually happening in the store. We've seen quite a bit of buzz on the blogs. We've seen quite a bit of buzz on online shopping. We've noticed that the pricing and the bundling has really ramped up, and I'm really going to be in the stores on Black Friday just trying to put my finger to the pulse to see what exactly the consumer is going to be doing. And what we've noticed and observed from the stocks that we look at is that you see Sony, Microsoft, and Nintendo all putting out really aggressive promotions. But one has to really point out Nintendo coming in with the most competitive pricing. But if you look at what the consumer is actually offered, consumer can get a PS3 with the new Move combined, and actually that's almost like getting a Nintendo Wii and a PS3 together. So it'll be really interesting to see how the consumer responds to that price-value equation.
Let's go to the other end of the spectrum, Bob. Melissa's highlighting stocks. Luxury stocks like Coach, have been very hot right now. I mean, how much is that because there's demand for luxury goods here? How much of it is because there's demand abroad?
Well, a lot of it is because of the demand from the higher income consumer. The higher income consumer really has been back and has been back for a while. And really what's happened is it's those consumers that are driving, whether we're looking at the luxury goods, the more affluent, attractive goods, whether we're looking at the moderate, even upper moderate sectors. It's really that higher income consumer who, while they may only really represent 20% of the entire population, they're driving 40, 45, 50% of all purchases. And that's what's driving, as at FTI, when we're working with these companies, that's what we're seeing is driving the sales of the Coach and the higher end, more luxury, more affluent focused retailers.
Bill, what kind of merchandise moves the most? I mean, you guys are moving anything from iPods to drilling equipment, I think.
Sure. Well, you'll see everything on liquidation.com that you'd see in a broadline big box retailer. I think the consumers that drive demand, of which there are about 1.6 million registered buyers on liquidation.com, they're aspirational. They are looking for value. They are going to want to see brands. They're going to see Wii, PlayStation, Xbox gaming systems. They're going to see better branded apparel and watches, Tag Heuer, Cartier. They're going to see a wide range of branded do-it-yourself home improvement tools. And they're coming to these sites and they're saying, look, I can get the state-of-the-art brand new item in the department store full price, or I can go to liquidation.com and perhaps get something that's 12 weeks out of current production, maybe 3 months behind the current technology cycle at, perfect condition, working, and it satisfies that consumer demand. Of course, our buyers are resellers, not consumers, but that